Hello students, today I would like to welcome you all to this video. In this video, I'm going to solve a Cambridge O-Level accounting paper 7707 variant 12. It's May-June 2023 paper P1 MCQs. So let's start solving this question. So in the first question we have, it's what is the main function of bookkeeping? So I always tell my student the bookkeeping means the recording of financial transactions. So we have to look into the options. We have option A, communicating information, interpreting information, and recording information, and summarizing information. So the right answer for this question is option C, recording information. That's the main function of the bookkeeping, is to record financial transactions. So in the next question we have, it says which components of statement of financial position do description 1, 2 and 3 relates to? 1. Finance and other resources that have been provided by the owners, so that's the capital as we know, and the money owed for goods supplied, unpaid expenses, and loans made to the business. So the right option for this is liabilities. So money owed for goods supplied mean liabilities, and the property owned by the business, amounts owed by customers, and unsold goods and money in the bank account. These are all our assets. So the right option will be capital in the first one. So we have C or D, one of them will be the right answer. So the second one is the liabilities. So if we can see, the liabilities in option D, and the third one is assets. So the right option for this question is option D. So in the next question, question number 3, it says a check received from Kate, a credit customer, was dishonored. And how was this dishonored check recorded? So we receive a check from Kate, we recorded by debiting bank account and credited Kate account. And now when the check is dishonored, we have to record and we have to do a reverse entry. Means we will debit the bank account, we will credit the bank account, and we will debit again the Kate account, because Kate will become our receivable again. So the right option for this question is option B. So the fourth question we have here, it says what does the sales ledger of a business contain? So sales ledger is a book in which we make T accounts of our customers. So let's see. Option A, accounts for trade payables, accounts for trade receivables, sales accounts, sales ledger control account. So normally the students get confused with the sales ledger and sales account. Sales account is a T account and sales ledger is a book in which we make accounts of our customers, mean the accounts of trade receivables. So the right option for this question is option B. Moving on to the next question, question number 5. We have here, okay, so it says which action is an example of double entry bookkeeping? So the double entry bookkeeping, in which we make debit and credit entries, the journal entries. So let's have a look onto the options. Making a journal entry to record the correction of an error made in the ledger, making entries in the sales journal and the sales ledger to record goods sold on credit, and recording a check paid to our trade payables in the cash book and purchase ledger and recording the purchase of goods on credit in purchase journal and purchases account. So the double entry, if we can see that this is the entry in which the double entry in which we make debit and credit. So the journal entry is normal entry that we made an error in the correction entry, and the second one we make the entry in the sales journal and the sales ledger. So that's normal day books and T accounts. So recording a check paid to trade payables in the cash book and purchase ledger. So that's both has the entries that relates to the double entry. So the right option for this question is option C. So recording a check paid to the trade payables in the cash book and purchase ledgers. So that's the right option. So then next question we have question number 6. It says, what is true about cash discount received? So they are recorded in the cash book. Discount receive and cash discount, yes, they do record in the cash book, and they increase the profit for the year, and yes, they also increase the profit for the year. If there is a trade discount, obviously we do not record trade discount and it will not going to affect our profits. So the right option for question number 6 is option A, in which the both is going to be ticked. So the next question is question number 7. It says, Tahir prepared a trial balance and he entered both the balances on the discount allowed account 900 and the bank overdraft 750 in the wrong columns. So the discount allowed means it's supposed to be recorded on the debit side, but it is recorded on the credit side, and bank overdraft it's supposed to be recorded on the credit side, but it is recorded on the debit side. Which total of the trial balance was higher, and what was the amount of the difference between the debit total and the credit total? So first of all we have to see the difference. So the difference between these two figures will be 150. So we have to deduct 900 less 750, which gives me the difference of 150. So if I can see the answers section, we have different figures of 300 and 150. 150 is there, but it is on the wrong side. So the actual difference will be 300. Let me show you how we have to do this. So normally it's recorded on the debit side, but instead of debit side it is recorded on the credit side, which means credit side goes up by 900, and this one, the bank overdraft, it's supposed to be credited, but it is recorded on the debit side, so means debit side goes up. Now the credit side is supposed to be 750, but it is 900, so it means credit side is more by 150. So I will write down here, so credit side is more by 150. On the other hand side, if I will look into the debit side, so debit side is supposed to be 900, but it is 750, so means the debit side is decreased by 150. So the total difference will be $300. So that's the $300 is going to be the answer A. That will be the difference, and the total that was higher in the credit column, because the credit column figure is more as is supposed to be. So obviously the one of the answers from A or B must be the right one. So because the figure is 300, because it is not going to be increased by 1650, it is going to be increased by the double than the difference. So the difference was 150, so that will be the right answer. So moving on to the next question, question number 8 we have here. It says goods sold on credit to J Sharp were debited in error to the account of T Sharp. So goods sold on credit, we're supposed to do sales credit and debit J Sharps, but instead of J Sharps we debited the T Sharps, so mean the T account name is wrong. So which type of error has been made? Error of commission is the right option that we have, in which we record the entry into the wrong name account. Complete reversal mean completely opposite entry, debited recorded as credit and credit recorded as debit. Original entry in which we make the wrong amount, and the principal in which we make the error in the category of the account, in the class of account, means asset recorded as expenses or expenses recorded as asset. So that's question number 8. Let's move on to the next question. We have here question number 9. So question number 9 says Khalid made entries in a suspense account to correct 2 errors found in his ledger accounts. Once the errors were corrected, the suspense account was closed. So error number 1, 700 sales has been omitted from the sales account. So means sales account is going to be credited and suspense account is going to be debited. And the error number 2 is the purchase journal had been overcasted by 550, which means the purchases is more, so we have to credit the purchases and we have to debit the suspense account. In both of these entries it is going to be on the debit side, so which means the total of 700 plus 550, so 1250 is the balance that should be come up on a credit side here. So let me make a suspense account for you to make it more clear. So the first entry will be the sales credit and suspense account debit. So I will record here sales by 700. In the second I have to reduce the purchases because it is overcosted, so purchases credit and suspense debit. So I will write down here purchases and by 550, and then if I'll close this, so here comes the 1250 will be the difference in the trial balance. So the right option is 1250 on the credit side, so that's the right option, option B. So let's move on to the question number 10. Alright, it says that Maya depreciate her motor vehicle at 20% per annum using straight line method. The motor vehicle cost is 15,000. The depreciation of the current financial year was incorrectly calculated at 15% per annum. So mean we have calculated a wrong figure, we have calculated a reduced amount of value. How much it will be? It will be 1500, means 10% of 15,000. So how will correcting the error affect the profit for the year? Obviously we have calculated, let me show you the working. So we are supposed to calculate 15,000 into 25%, that gives 3750, but instead of this we have calculated 15% of 15,000 is 2250. So how much we have not calculated? So 3750, 1500 is less amount that we have calculated. So once we corrected this one, obviously our depreciation will go up, mean the expenses will increased, and obviously the profit will go down. So the profit is going to be decreased by 1500. So the right answer for this question is A. So let's move on to the next question. Question number 11. It says Wasim received a bank statement and he found that the bank had charged interest twice in error and that a dividend had been received on an investment. Wasim then updated the cash book and prepared the bank reconciliation statement. Where did he record these two items? I always tell my student that when there is an error in the bank statement, so that errors needs to be corrected in the BRS, bank reconciliation statement. It is not going to be the corrected in the cash book. And the dividend, obviously, that will be recorded in the updated cash book. So here we have this error in the bank statement, and that will be corrected in the bank statement, will be recorded in the bank statement, bank reconciliation statement. So the dividend will be in the updated cash book. So the right option is option B for this question. Let's move on to the next question. Question number 12 we have here. Alright, so it says Thambi is preparing her sales ledger control account and she needs to know the total of goods which have been returned by credit customers. So means sales returns and the amount owed by credit customer which have been written off as irrecoverable. So irrecoverable, she want to know about the irrecoverable debts and she want to know about the sales return. Where can she obtain this information? So goods returns, we will get this figure from the sales return journal, sales return day book. So that's because the sales ledger, obviously, so it will be from the sales return journal. And irrecoverable debts we record in the irrecoverables. As we can see that we have purchase return account, purchase return journal, sales return account, sales return journal. So if students are confident about the sales return journal is the right for this goods return figure, so goods return entry we will found from the sales return journal. So obviously if they may confuse with the irrecoverable debts, so they must opt with this option. So I always tell my student, if you got the right in the first section, obviously the other section will be corrected if you are confused. So the journal obviously is the place where we got the information from about the irrecoverable debts. So the right option for question number 12 is D. So let's move on to the next question. Question number 13 we have, on 1st August the sales ledger control account had a debit balance of 1800 and during August a debt of 200 was written off as irrecoverable and 10,000 was received from credit customers. On 31st of August the credit customer owed 3,000. So what was the total of credit sales in August? So for doing this, always suggest my students to make a sales ledger control account. So we have opening receivable balance, so that will be 1800, that will come up here, and we have a return of irrecoverable debts that will goes on the credit side, and we have a receive from credit customer 10,000, obviously that will come up here on the credit side, and we also have a credit customer balance 3,000, so that will come up here, and BD will come up here 3,000. So now we have to just close this T account. So this side has a bigger value, so 13,200 will come up here, the total of this side, and always include CD while you are totaling this column, and we have to deduct this 1800 from 13,200 less 1800 to get the answer of credit sales is 11,400. So the right option is option C for the question number 13. So in the next question, question number 14 we have here, it says that a wholesaler had the following transactions: sold goods 30,000 on credit and receive a check 12,000 from sale of old fixture at book value. So how could these amounts be classified? So sale of goods, obviously it's on a credit, so we have not received any amount of money, so it is not going to be recorded here as a revenue. It is on a credit. Obviously we will receive this amount of money later on, so this will be our revenue receipts, and the check received from the sale of old fixture, obviously that will be our capital receipt. So if I will go with the capital receipt thing, so we have only one option that contains a capital receipt of 12,000, and if we are confused with the goods sold on credit, maybe it is because we have not received the cash yet. So because we are pretty much sure about this 12,000, it's a capital receipt, so we'll go with option C. So the revenue received 30,000, obviously we will record that thing as well. So option C is the right option. So let's move on to the next question. Question number 15 we have here on the next page. Alright, so question number 15 says, a trader debited the cost of repairing office equipment to the office equipment account. So that's an error of principle. Mean the cost of repairing mean the expense account, and instead of debiting in an expense account, we debited the office equipment account. So how did this error affect the financial statement? Profit for the year obviously will be lower. It is not saying after the correcting the error, so it is saying after this error. So it is not going to be overstated, it is going to be understated, and the non-current asset is going to be overstated. So the right option for this question is the profit for the year, because we have not recorded the expenses obviously. So expenses are understated and profits are overstated, yes. So we have to overstate, our profits are overstated and the non-current asset is also overstated. So option A is the right option. So let's move on to the next question. Question number 16 we have here. It says a business bought two assets X and Y on 1st January 2022 for 2000 each. So we have two assets. It depreciates asset X by 10% per annum using straight line method and asset Y by 10% per annum using reducing balance method. So which statements are correct? Asset X will be fully depreciated before asset Y, and in 2022 the depreciation charge is lower for asset X and then for the asset Y, because in the first year the both by the straight line method and with the reducing balance method, they both multiply with the cost, so they both will have the same amount of depreciation charge. It means the option might be option A and option C, because this statement is incorrect. So now let's have a look into this one. It says the asset X will be fully depreciated before asset Y. The asset we are using straight line method obviously is going to be fully depreciated in 10 years. So 10%, 10%, 10% and onward, it will become 100% after 10 years. But instead of here we have reducing balance method, so it is not going to be fully depreciated in 10 years. There will be some net book value coming up. So that is correct. So the right option for this question number 16 is option C. That is correct, that X will be fully depreciated after 10 years but not Y. So question number 17 is the next question. Ravi's financial year ends on 30th April and Ravi bought a motor vehicle for 8,000 on 1st May 2020 and sold it for 4050 on 1st May 2022. So he uses the reducing balance method of depreciation and 20% per annum. And what would be the recorded in the income statement for the year ended 30th April 2023 for the disposal of the motor vehicle. So it's only asked for the disposal of the motor vehicle, so we have to look into this, and we have to calculate the depreciation. So the year 1, so 1st May 2020, so we'll have the year end will be, so the year 1 we will have a depreciation of 8,000 into 20%, so that will be 1600. Let me just do it for you guys. So 1600 will be the depreciation for this year, and that will be for 2020. And then for the year 2, so we have to deduct this because it is a reducing balance method, so we have to get the net book value by deducting this 1600, and then we have to multiply this by 20%. So 8,000 less 1600 is 6,400, so into 20%, which gives me 1280. So 1280 is the figure. So because year ends is on 30th of April, so dates are very important. So 1st May, so means the opening of the year. So in 2000, this will end up in 2021. So the first year that will be ended up on 30th of April 2021, because we purchase on 1st May 2020, so obviously that will be end up on 30th April 2021. So the second year that will end up on 30th April 2022. So the 1st May is the very next day we sold this asset, so means the total depreciation will be for the 2 years. So we're not going to have any depreciation on 30th April 2023. So the total depreciation is 1280 plus 1600, which gives a total of 2880. So 2880, that's the total depreciation. So the net book value of this asset will be at the time of selling will be 8,000 less 2880, so which gives me 5120, and we solved this asset for 40 and 50, so means there is a loss of $1,070. So the right option will be option C. Let me write down the answer, 1070. So that's the question number 17. So let's move on to the next question. So the question number 18 we have here. All right, so question number 18 says, on 2nd January Razia wrote off 450 owed to her by an each a credit customer as irrecoverable, and on 2nd October Anit paid 100 by check in part settlement of that debt. So it's a recovery of irrecoverable debts, because we already wrote off this 450 and now we receive 100 from the person we already wrote off. So which entries would Razia made on 2nd October? Obviously the bank account is going to be debit and that recovers account is going to be credited. We are not going to credit the irrecoverable debts account, so we'll debit the bank and credit debt recover account. So that's the question number 18. Option A is the right option. So the next question number 19 we have here. It says Asha provide the following information about her inventory at the end of the financial year. So we have product P and J, and we have number of units 200 and 300, cost price per unit 2.53, and selling price per unit 2 and 3.5. So at what was the total value of Asha's inventory? So the rule here is cost and the selling price, which one will be the lower, we will record the inventory at that amount. So the cost price versus selling price, this one is lower, so we'll record this 200 units into at the rate of $2, and the lower here is 3, so we'll record 300 into at the rate of 3. So the right answer will be 200 multiplied by 2 means 400, and 300 multiplied by 3 means 900. So the total of these two is 1300. So the right answer will be A. So that's how we're supposed to solve the inventory valuation question. So the next question, question number 20, we have which group contains only service businesses? So bookshop is a trading business, jewelry repairer, yes, it's a service, taxi firm, and food store. And language school, taxi firm, jewelry repairer, taxi firm, news agent, and food store. So the right answer is jewelry repairer, taxi firm, food store is the trading business. So language school, obviously schooling is a service, taxi firm, they also provide the services, and jewelry repairer, they also provide the services. So the right option for this question is C, because in this taxi firm, news agent, food store is also again a trading business. So the right option is option C. So question number 21, we have, it says that what does the statement of financial position of a business shows? So the statement of financial position shows the position of the business that we have by showing the asset and liabilities and all other equity section. So let's see the options. Option A, asset and liabilities at a certain days, yes, it does show that. Calculation of the annual profit or loss, no. Changes in the equity during the financial year, no, because there is a separate statement. We have statement of changes in equity for this. And income and expenditure for the financial year, no, it goes to the income statement. So income statement, there is a separate. So the right option for this is option A for this question, question number 21. So moving on to the next question, question number 22. All right, so question number 22 we have here, it says a trader pays her insurance premium on 1st January each year for the following 12 months. So 1st January we paid for the whole year. So she made the following payments for insurance: 1st January 2022, 1680, and 1st January 2023, 1920. And how much did a trader include in the insurance in her income statement for the year ended 31st March 2023? So now we have to see that if this year ends on 31st March 2023, it means it starts from 1st April 2022. So at 1st April 2022 till 31st March 2023. So if we paid this on 1st January, it means at this date, the 31st of March 2022 means the previous year, or the 1st April 2022, we had an opening prepaid balance of 9 months, because January, February, and March is 3 months, and 1st April, the next accounting period, starts. So we have a 9 months prepaid, which means 1680 divided by 12, because it's a whole year, and multiplied by 9 is 1260 is the amount of prepaid. So I will suggest the students to make an account here. Account of insurance is the question from accrual and prepayment section. So the prepaid balance will comes up on a debit side, so 1260, because it's an expense account, and expense prepaid is over asset. And this much amount of money that we paid during this accounting period, the 1st January 2023. So to record this, we credit the bank account and we debit the insurance account. So that will come up here 1920. And at this date, 31st of March means the closing year end date, we again have a 9 months of prepaid, but with the value of from the value of 1920. So 1920 divided by 12 again and multiply by 9. So 1440 is the closing prepaid balance. So CD 1440, and it will again become 14440 here. That's how the T account should be prepared. So we have this side has a bigger value, so 1260 plus 1920, which gives me the total of 3180. So I will write down 3180, and I will deduct 1440 from this, less 1440, which gives me the balance of 1740. So 1740 will goes to the income statement. So that's the answer, 1740. The right option for this one is option B. So that's how we're supposed to solve an accrual prepayment question easily. So question number 23 we have here, and it says, which item is added to the profit for the year in the partnership appropriation account? So we only add the interest on drawings, and interest on capital less interest on drawing, add partner drawing we do not record, and partner salary is also less. So the right option for this is interest on drawings. Moving on to the next question, question number 24 we have here. It says, Abby and Amy are in partnership, and Amy entitled to an annual partnership salary of 3,000. They share residual profit and losses equally, and the profit for the year ended 31st August 2022 was 12,600. On 1st September 2021, the partners' current account balances were as follows. So Abby had credit 2,500 and Amy 1,400 on a debit side. So what was the credit balance on Amy's current account at 1st September 2022? Mean we have to make a current account of Amy. So let's make a current account of Amy here. So Amy current account opening balance has a debit balance of 1,400. So obviously we'll write down here 1,400 BD, and Amy entitled salary, a partnership salary, that will become up here 3,000 salary, and then there is a profit or loss equally. So how much profit share will get by Amy? Let's see. So we have a profit of 12,600. So after deducting this salary 3,000, so we will deduct we will divide this equally, so it gives the share of Amy 4,800. So that will come up here 4,800, and there is no information given about drawings, so we will not going to record here any drawings. So we'll just close this account. So this side has a bigger value, so 7,800, and we will deduct 1,400 from this balance. So the right answer is 6,400. So the right option is option C for this question. Moving on to the next question, we have question number 25, and it says, what is meant by the term equity? Equity we know is the section that relates to the owner. So dividend paid to the ordinary shareholders, fund raised through borrowing, interest paid to the debenture holders, and total funds provided by the shareholders. So the right option for this is option D, because it relates to the owners, and shareholders are the owners of the company. So moving on to the next question, question number 26 we have here. Alright, so it says, during the financial year, AB Limited paid debenture interest 1,400 relating to that financial year, and at the end of year, debenture interest 700 was accrued. So the amount that we need to tell which figure will goes to the income statement and the statement of changes in equity. Interest of debentures we will not going to record in the statement of changes in equity, and yes, it does comes into the income statement, and we add accrual into the amount paid. So 1400 plus 700, which gives 2100. So the right answer for question number 6, which will be B, because 2100 will goes to the income statement, accrual added up into this paid figure, and there will be no entry in the statement of changes in equity. So let's move on to the question number 27. We have here, it says, which items are included in an income and expenditure account prepared for a sports club? So income and expenditure account is similar to the income statement. So let's see, cost of new furniture purchased during the year for the clubhouse. It will not going to go into this income and expenditure account because it's a non-current asset. And depreciation on furniture and sports equipment, yes, it will be recorded in the income and expenditure account. And we have rates for the clubhouse paid in advance for the financial year. So that's an advance payment, means the accrual thing, accrual and prepayment adjustment of rates, and rates is an expense obviously. So that will advance payment for the next accounting period, next financial period. So advance prepaid we did not include, we less prepaid, and the subscription that remain unpaid by the members at the end of the financial year. So it's an accrual. So accrual obviously we will add up here into the, while preparing the income and expenditure or income statement. So the right option is 2 and 4. So the right option is C. The next question, question number 28, we have here, it says, Melody is a music club, and the club holds a music concert once every year, and prizes are awarded to the musicians selected by a judge. The club provide the following information relate to the latest music concert: the sale of concert tickets, purchase of concert prizes, sale of concert programs, and payment of fee to the concert judge. So what was the profit from the concert? So we have seen that this is the sale, it means it's over income, and also the purchase price is over expenses, and the sale of concert programs is also over income, and we have a payment fee to the concert judge is over expense. So I will simply deduct these two figures from these incomes. So there will be a 1500 plus 150 less 450 less 250, which gives me a figure of 950. So the 950 is the right option. So that's option A. That's the profit. Alright, so let's move on to the next question, question number 29. We have here, it says the business provide the following information: opening inventory of raw material, clothing inventory of raw material, purchase of raw material, and carriage inward of raw material. So what was the total cost of raw material consumed, means the raw material figure that we will record here. So as we know that opening 50,000 plus purchases, this is going to be deducted because the clothing inventory of raw material plus purchases of raw material means 80,000, and we also add the carriage inward on raw materials. So that will be 2,000 and less 60,000, which gives me the figure of 72,000. So 72,000 is option B. So that's the right option, option B. So the next question, question number 30, we have here, it says Ashwin started a business as a taxi driver. On 1st January 2022, his taxi cost $5,000 and he paid $100 into the business bank account. He did not keep any accounting records On 31st December 2022, he had 1750 in the business bank account, and his taxi was valued at 4,000, and he owed 50 to the garage for repairs. During the year, he took 1600 out of the business bank account as drawing. So what was the profit for the year? So we have here the information about the opening capital. So the opening capital is 5,000 plus 100, because he had a taxi plus 100 into the business bank account. So 5,100. So the closing capital is, we have to add the assets and less liabilities. So we have here 1750 in the business bank account means assets. So we have taxi of 4,000, so I'm going to add 4,000, and he owed 50 to the garage repairs means the liability is $50. So if we'll do the asset minus liabilities, which gives me the capital of 5,700. So that's the closing capital. Let me write down here, closing capital 5,700. So now, as we know that the equity section says that opening capital plus profit less drawings gives us the equals of closing capital. So we have drawings here, and that is 1600. So if we'll go back from the closing capital and we'll add the drawings, because we normally deduct the drawings from the opening capital and we add the profit. So I will go back. So 5,700 plus 1,600 is the drawings, and less the opening capital 5,100, which gives me the balance of 2,200, means the profit for the year. So the right answer for this question is option B. So let's move on to the next question. Question number 31. It says a trader did not keep a complete set of accounts. He provided the following information for the year. We have opening trade payables, including trade payables, payment to credit suppliers, cash discount received. So we have to tell the purchases for the year. So it's simple. We have to make a purchase ledger control account here. Alright, so we have opening trade payables, that goes on the credit side because it's over liability 5,000, and we have closing trade receivable, that comes as balance CD, and then balance BD 9,800. Alright, so the payment to the credit suppliers will come up here on the debit side, 35,000 with the bank. So 35,000, and the cash discount received again will come up on the debit side because it's going to be reduced over liabilities. So that's all the transaction that we have recorded here, 1 2 3 4 1 2 3 4. So we have to just make a total of this side because this side has a bigger value. So it says 35,000 plus 3,000 plus 9,800, which gives the total of 47,800, 47,800, and we have to deduct 5,000 to get the answer is 42,800. So 42,800 is the purchases. So the option here is D, that has 42,800. So let's move on to the next question number 32. Alright, so question number 32 says T Limited provide the following information. So we have net profit before interest, and we have profit for the year. So the difference between these two is the interest, so that's a 1,200. So equity at the year end is 192,000, and we have 6% debentures of 12,000. So what was the T Limited return on capital employed? Because it is the equity plus non-current liability which gives me the figure of capital employed. So the capital employed is by adding both of these two, it means 192 plus 20,000, which gives me 212,000. So 212,000, and profit before interest will come up here. So that's the profit before interest, 29,200. That's the the formula of return on capital employed: profit before interest divided by capital employed. Capital employed contain the equity plus non-current liability. So 29,200 divided by 212,000 multiplied by 100, which gives me the answer of 13.77%. So the right answer will be B. So let's move on to the next question. Question number 33. It says Sabilo's liquid asset test ratio was higher on 1st January 2022, and then it was on 31st December 2022. Liquid our asset test ratio mean current asset less clothing inventory divided by current liabilities. So it was more in the beginning than at the end. So it was higher at the start, but it was lower at the end. So what could be the cause of this? So I always tell my student, we have a numerator and denominator. So if there is a reduction, it means there is a reduction in our numerator figures, or if there is an increase in the denominator figures. So bank overdraft decreased. So bank overdraft decrease means current liabilities is going to be decreased. So if the current liabilities is going to be decreased, means it will not be a right answer. So we have to choose the option that either increase this or decrease, because if we are going to higher, it was higher at the beginning. So because we have to reduce this, yes, and we have to increase this if we are going to make it down. So bank overdraft is going to be decreased, means this going to be current liability is going to be decreased. So it will not be an option. So inventory is going to be decreased. So inventory means inventory, we deducted the inventory from here. So if it's going to be decreased, means the less they will be deducted. So means the more there will be figure. Obviously this will not be a right answer. So the other payables decreases, means the other liabilities is going to be decreased. So obviously that will again not be an answer. The trade receivables is decreased, mean the current asset is going to be decreased. So the right option here is option D. So the students mostly get confused with this option, inventory decrease, because if we look into this the ratio, so we have current assets less closing inventory. So we have to deduct the closing inventory. If inventory is going to be decreased, mean the amount of inventory will be less, and deducted less will giving me more in current assets. So that's why it is not a right option. So let's move on to the next question. Question number 34 we have here. The following ratios relate to the businesses of EVA and Max. So we have current ratio 2.2, 2.4. We have liquid ratio 1.4 and 1. So this has more in current, but this has less in liquid test ratio. So the options are: an accounting student made the following statements, and the statements are: Eva can meet her current liabilities. Eva can make her current liabilities from her current asset more easily than Max. So no, Max can more easily cover her his current liabilities because his current ratio is good. So we have to tell the correct one, but this one is not correct. Eva can meet her current liabilities from her liquid asset more easily than Max. Yes, Eva has more liquid assets than Max, so that's the right option. So option 2 can be the right one. So the third one, Max has insufficient current assets to meet his current liabilities. No, in both section it does have it does have the assets. So in the fourth one, the max has sufficient liquid assets to meet his current liabilities. Yes, it has equal than his liabilities. So the right, this one also is correct. So the right option is 2 and 4, which is option D. So that was question number 34. Let's move on to the last question of this paper, question number 35. So it says a cafe owner made no entry in her accounts for increased competition when another cafe opened nearby. So which accounting principle was applied? So we cannot measure the competition in terms of money. So that's the right option is money measurement. So the option C is here. Historic cost we use for the non-current assets. Materiality is the figures that has a major amount of value, and prudence is assets is not going to be increased and profits should not going to be overstated, and liabilities and losses should not be understated. So that's prudence. So the right option for this question is C. So that's the whole paper. So if you have any comments, any questions, please write it down in the comment box. Thank you very much.